Friends, in the previous part, we were dealing with the costing in case of hotels and lodges. And in that, we also did question number 12.4. We completed this particular question. Now, let's continue with the same thing, that is costing of hotels and lodges. We will be doing one more problem from that. And after that, we will be moving to the costing of the other industries. Okay. So for the time being, let's take question number 12.5. This is a question for the costing of hotel industries. Okay. Similar to the previous problems, but a bit new concepts are also being used in this particular question. Okay. So please pause the video and read the question in its full, and then we will read it once again. Okay. Now, what is given in the question? Okay, so let's see what is given in the question. The question says, a lodging home is being run in a small hill station with 100 single rooms. So we are talking about a lodging home or a hotel, whatever. Okay, and it is situated in a hill station. And this information that it is situated in a hill station may be useful when we do the problem. Okay, now how many rooms it is having? It is having 100 single rooms. Okay, so 100 single rooms. And the home offers concessional rates during 6 off-season months in a year when the number of visitors are limited. See, as we all may be knowing, when it comes to hill stations or hotels, especially which are located in tourist locations, there will be both off seasons as well as the season periods. Okay, the inflow of guests will be very high during the seasonal months, whereas during the off season, the inflow will be very less. But the hotels will have to maintain the facility, the entire facility in both off season as well as season periods. So generally what these hotels will do to attract more guests during the off season, they always tend to give some discount in the room rents. Okay, some discount in the room rents as compared to the seasonal months. So the question is that this particular property has 6 months as the seasonal period and the balance 6 months in a year as the off-season period. Okay, now what about the rent? They say that during this period, half of the full room rent is charged, which means during the off-season, they are charging only 50% of the actual room revenue or room rent, which will be charged in the seasonal period. Okay, now the management's profit margin is targeted at 20% of the room rent. So the management wants to fix the room rent in such a manner that the room rent includes a profit margin of 20%. Okay, now the following are the cost estimates and other details for the year ended 31st March 2020, assuming a month to be 30 days. Now, what all informations are given? The occupancy during off season is 80%, whereas the occupancy during off season is only 40%. So off season will have only 40% occupancy, whereas the seasonal month 6 months will be having 80% occupancy. Now total investment in the home is 200 lakhs, of which 80% relates to building and 20% relates to furniture and equipment. So you can compute how much is the investment that is made in buildings as well as the furniture and equipments. Now, when you come to the expenses, the question says that staff salary, okay, the staff salary excluding room attendance. So this salary does not include the salary of room attendance. It is 5,50,000. Then repairs to building, it is 2,61,000. Then laundry charges 80,000, interior 1,75,000, and miscellaneous expenses taken to be 190,800. Now, annual depreciation is to be provided for buildings at 5%. Okay, buildings will have 5%, as well as the furnitures and equipments will be having 15%, and both on straight line method. Okay, now going further, the room attendants are paid ₹10 per room day on the basis of occupancy of the months in a month. So whatever be the occupancy, actual occupancy during a particular period, the room attendants are paid at a rate of ₹10 per room based on the actual occupancy. Okay, now monthly lighting charges are 120 per room. except in 4 months in winter season when it is 30 per room. See, here also there is a difference between the off season as well as season, and also the winter season as well as the remaining season. They say that the monthly lighting charges will be rupees 120 per room. Okay, except in 4 months in winter when it is 30 per room. So during the winter, the electricity charges or lighting charges will be less because it is winter and nobody is going to use this air conditioner or whatever. All those cooling things is not required in the winter. Okay, whereas so in winter the electricity consumption will be very less, especially you think of a hill station where in winter season it will be all the more cool, right? So in the winter season the electricity charges will be only 30 per room. On the remaining months or remaining period it is going to be 120 per room. Okay, and what is the duration of this winter season? It is only 4 months. Now what is the requirement? You are required to work out the room rent chargeable per day both during the season as well as off season months on the basis of the foregoing information. So whatever information is given, on the basis of that you are required to compute what the room rent that needs to be charged during the season as well as off season separately. Okay, so we will start doing this now. Solution. So first of all, what we have to compute is we have to know what is the total number of room days in a year. We know that in case of a hotel, the cost unit, service cost unit is nothing but the room plus days per room per day. So room day. So total number of room days in the year. Okay, so room days differs in both season as well as off season. So both have to be computed separately. So you have season period. Okay, then occupancy. Okay, then you have the, see, whenever you get the season, okay, what you need to do is you will have to convert that into the equivalent rooms. See, here you have two types of rooms. One where the rate is full during season, whereas in off season you are charging only 50%. So if you want to compute the equivalent units, the 2 room days in the off season have to be considered as equivalent to 1 room day in full season. Okay, so equivalent number of room days, and the principle that is used is 2 room days in off season is equal to 1 room day in season. That is the equation. Now how to do the calculation? Season period, we are taking seasonal period where you will be getting 80% occupancy. How many numbers of rooms are you having? You have 100 rooms and you are expecting 80% capacity. Okay, and you say that you have 6 months during the off season and every month there will be 30 days. So 100 into 80%, 80 into 6, 80 into 6 into 30, that will be 14,400. Similarly, when you take the off season, okay, again 6 months where the occupancy is only 40%. 100 rooms into 40% into 6 months into 30 days. So that is equal to 40 into 6 into 30. That is 7,200 room days. Okay, so total will be 14,400 plus 7,200. Total will be 21,600 room days. But the 7,200 room days which you are getting in the off season, that is only 50% of the normal room days, because the rent what you get is only 50% of the normal rent. So when you compute the equivalent, what do you have to do? This 14,400 is equivalent to 1, or let me take it as, yeah, 1 room day equivalent, that is equal to 14,400. Whereas here it is 7,200 into 1 by 2 room days, that is equal to 3,600. So total 14,400 plus 3,600 will give you 18,000 room days. So that is the number of room days. Now this is all about calculating the room days. Okay, now what you have to do? You have to compute the total cost, because your purpose is to find out the room rent to be charged, and room rent to be charged will be total cost plus profit. That will be the total rent divided by number of room rents. That will give you the room rent to be charged. So statement of total cost. Statement of total cost. You have to start with the first one. What is the first one? It will be staff salary. Staff salary, it is rupees 550,000. Then you have repairs to buildings. Repairs to buildings is 2,61,000. Then next is laundry charges 80,000. Laundry charges is 80,000. Then you have interior 175. Then miscellaneous expense 190, 800. Interior. Interior is 175,000, and miscellaneous expenditure is 190, 800. Now what do you have to do? You have to consider the remaining cost. Okay, the remaining cost is, you have the depreciation. Now what about the depreciation? How do you compute the depreciation? They say that we have already computed that. See, in the case of the hotel or the holiday home, total investment is 200 lakhs. Out of that, 80% is towards building. So 200 into 80, and that is getting a depreciation of 5%. Okay. Whereas on furniture, 200 into 20%, that will be the total investment in the furnitures, and it is provided depreciation of 15% on SLM basis. So the depreciation on building 200 into 80% into 5%. So that will be 8 lakh. Then next, depreciation on furniture and fittings. It is 200 lakhs into 20% into 15%. 200 lakhs, 2 crores into 20%. Okay. So it is 40 lakhs into 15. It is 6 lakhs. So that is the depreciation. Now you have room attendance salary. Room attendance salary, they say that it is 10%. Oh, sorry, rupees 10 per room day. So rupees 10 room day. And how many room days you are having? Here, when you take the number of room days, you have to take 21,600. It should not be 18,000 because 18,000 is the equivalent. But the room days, the room attendance have to be paid for each room day during the off season also. You cannot say that, see, what we get is only 50% of the total actual room revenue. So we will be giving only 5 rupees. No, that you cannot say you cannot tell to the room attendance. So room attendance will be paid rupees 10 per room day. Okay. For the entire 21,600 room days. So this is equal to into 21,600. So here you can note down that you cannot take the equivalent numbers. So it is 2,16,000. Okay. So do not consider equivalent numbers. Okay. That is not permitted. Now what do you have to do? You have to take the remaining one more cost is there. That is the lighting charges. Now lighting charges also they say that it is 120 during the normal months and 30 for the other months. Okay, so you have to, so what do they say? It is monthly, it will be rupees 120 per room and 30 per room in the winter. Okay, now here you have a problem. So let's give it as a separate working note. I am giving some space for the remaining calculation. Computation of lighting charges payable. See friends, the lighting charges have to be paid based on the number of room days. Now, number of room days, it is not constant throughout the entire 12 months. Okay, number of room days in the off season is different from the number of room days in the season. I'm talking about the monthly number of room days. The number of room days in the off season will be less than, or at least let's say 50%, because the occupancy in the off season only 40%, whereas the normal occupancy is 80%. So it will be only half. So when you talk about the winter, okay, you have to see in which period you will have the winter, whether it is in the season or off season, because depending upon that, the number of room days in the month will be different. So you have two season as well as off season. Now another thing you have to see in which period, whether it is in season or in the off season, the winter comes, that 4 months of winter comes. Now how can you find it out? If you go by the common logic, it is a hill station, and generally in hill stations the winter will be considered to be an off season, because in winter the tourists will be reluctant to come to hill stations. Okay, they prefer summer and other duration, other seasons for coming to the hill stations in bulk. So winter is generally considered to be off season for hill stations. So here you have to write a note. It is assumed that the winter period falls in the off season. Okay, as the holiday home is located in a hill station. Located in a hill station. Okay, now you can find out what is the lighting charges payable. So statement of lighting charges. Okay. Now we read number of room days per month, lighting charges payable. Lighting charges payable. Period, seasonal period of 6 months. Okay. During the season period, you will have 100 rooms occupied at 80%. Okay. And you are having how many months here? 6 months. And how many, what is the rate that is payable? It is rupees 120 per month for each room. So that is equal to, okay, you cannot take it as, yeah, number of rooms will be 80 rooms. So lighting charges payable will be 80 rooms. And for each room, you will have to pay 120 per month. And you have 6 months. So it is 80 into 120 into 6. That is rupees 57,600. Similarly, off season total is 6 months. But in off season, you have winter as well as non-winter. So let's take winter first. Winter, you have 4 months. So here it is 100 rooms, and each rooms, the capacity is occupancy is 40%. So you will be having only 40 rooms. So this will be 40 rooms into, during winter, you will be paying only 30 per month. And how many months you have? You have 4 months. So that is equal to 40 into 30 into 4, 4,800. Next, you have off season, non-winter, you have 2 months period. So here also 100 rooms, you will be having only 40%. So 40 rooms. So 40 rooms here into 120 per month into 2 months. So the total will be, so this will be 40 into 120 into 2, that is 9,600 rupees. So total lighting charges payable is 57,600 plus 4,800 plus 9,600 rupees, 72,000 is the total amount. Now you have to take this to the statement of cost, 72,000. So total cost will be, what is the total cost you are getting? Total cost, you have to take the total of here, 5,50,000 plus 2,61,000 plus 80,000 plus 1,75,000 plus 190,800 plus 8 lakhs plus 6 lakhs plus then 2,16,000 plus 72,000. So total will be 29,44,800. Total cost is 29,44,800. Now with this, you have to add profit margin, and profit margin, they say that it is 20%, right? It is, what is the profit margin? 20% on the room rent. So profit margin is 20% on room revenue. 20% means 1 by 5 on the revenue. That is equal to 25% or 1/4 on total cost. So this will be 29,44,800 divided by or into 25%. It will be 7,36,200. So total rent for the year 29,44,800 plus 736,200. You get 36,81,000 total. Okay. Now this is the total rent for the full year. Now what you have to do? You have to find out what is the room rent per day. Next is computation of room rent per day. How do you compute this room rent per day? Room rent per day is equal to total revenue divided by total number of equivalent room days. That is equal to 36,81,000 divided by what is the number of room days? Number of room days we have already computed in the beginning, 18,000. So that is equal to rupees 204.50 per room day. So this is the standard room day rent per room day during the season periods. So therefore room rent during season is equal to rupees 204.50 per room day, whereas room rent during off season, that is equal to 204.5 divided by 2. That will be 102.25 per room day. So one is 204 and 0.50 per room day during the season, and during the off season it will be 50% of that. So 102.25. Okay. So this is all about this question, and it was regarding the costing of a hotel or accommodation lodges. Now we have to move to the next lecture, that is on the costing of hospitals. Okay, now when you talk about hospitals, it is also very much similar to the hotels, because in hotels also you give the accommodation, whereas in hospitals also you give accommodations to the patient. Okay, now in case of accommodation in hotels, the cost unit is room days or per room plus per day, that is room days. Whereas when it comes to the when it comes to hospital, it will be per patient per day. So per patient day. Okay, that will be the cost unit. Now, in addition to that, in a hospital, you will have various other services also, where the cost unit will change. Let's say surgeries. For surgeries, there will be surgeries will be one service. So the cost of surgeries will be expressed in per surgery. Then there will be OP consultation, IP consultation, then sale of pharmacy medicines. So all these things, a multitude of services will be provided by a hospitals. So for each service, the cost unit may also be different. So you will have to, if you want to find out the rate to be charged for each service, you have to find out the total cost of that particular service. Let's say the total cost of surgery is conducted, or total cost of medicines, total cost of the IP or OP, whatever. So like that, you have to compute. And depending upon that, you will have to calculate what? The rent per day. Okay. So we will do one problem on that. Now, one more issue is here. What you might face in a hospital is, since the hospitals provides different types of services, okay, and the hospital per se incurs a lot of common expenses. These common expenses will have to be allocated to each type of the services. Let's say, for example, security charges of the hospital. Security charges for the hospital have to be allocated to the pharmacy. It has to be allocated to the room revenue. It has to be allocated to the surgeries, like operations or procedure cost and whatever. So whatever services are being provided in the hospital, okay, from which they generate the revenue, this common cost have to be allocated accordingly. Okay. Anyway, we will do the problem here. So you can take question number 12.6, pause the video and read the question 12.6. Okay, now let's see what is given in this question. ABC Hospital runs a critical care unit in a hired building. CCU consists of 35 beds and 5 more beds can be added if required. So we are talking about critical care unit. How many beds the CCU is having? It is having 35 beds, and if you want, you can add 5 more beds. Okay, now one is the rent per month. What is the rent per month for the CCU? It is 75,000. Then you have the supervisor salary. Okay, 2 persons have to be employed as supervisors, and each supervisor have to be paid 25,000 per month. The nurses, 4 person, 20,000 per month each. Okay, then next you have the ward boys. Ward boys, you need 4 person, and each one will be paid 5,000 per month. Now doctors are paid on the basis of number of patients attended and the time spent by them. So how much they are getting? Each doctor is getting 2,50,000 per month. Now numbers of doctors, that is also not given. Okay. Now the other expenses, repairs, which is a fixed expense, 81,000. Food to the patients, which is a variable expenditure, that is 3 lakh. Medicines as a variable, 7,50,000. Administrative expenses, these are allocated. I told you, when it comes to the hospital, you will have to allocate certain common expenses to each type of service. So accordingly, the administration expenses have been allocated to the CCU function also, and it comes to 10 lakhs. Now food to patients, it's variable 8,80,000. Laundry charges variable 6 lakh, and other fixed expenses 10,80,000. So if you clearly observe, whatever expenses that are given in the question, that has been bifurcated either as fixed or variable, or you may be able to do the allocation whether it is fixed or variable on your own. Okay, so there will be something for that. Now it was estimated that 150 days in a year, 35 beds are occupied, and for 80 days only 25 beds are occupied. So when you take the total number of days in the year, they are considering only 150 days plus 80 days, so 230 days, not 365 or 300 days like that. So they are taking only 230 days, and over this 230 days, for the 150 days only 35 beds were occupied, and for remaining 80 days, what happens? Only 25 beds are occupied. Now the hospital hired 750 beds at a charge of rupees 100 per bed per day to accommodate the flow of patients. So in addition to this 35 beds which the hospital is having, they had to hire 750 beds during the year, and the rental what was paid is rupees 100 per bed day per day, and it was necessary to accommodate the additional patients. Now however, this does not exceed more than 5 extra beds over and above the normal capacity of 35 beds. Okay, so 35 beds that were available with the hospital, you don't have to hire out anything, but in some days your requirement was more than 35. So what they did, they had to hire it from outside. Now whatever be the number of beds that has been hired in a particular day, it does not exceed 5 additional beds. So maximum it will be only 35 plus 5, 40, not more than that. Now what is the requirement here? You are required to calculate the profit per patient day if the hospital recovers on an average of rupees 2,000 per day from each patient. So what is the charge that you are getting from each patient? It is rupees 200 per day from each patient. So you want to find out the profit. Now find out the break-even point. Yes, break-even point. What is the formula for break-even point? We have learned it in the first question, right? So break-even point is equal to fixed cost for the period divided by contribution per unit. And contribution per unit, you know what is this contribution per unit? It is sales revenue or revenue minus variable cost. So you have to compute the break-even point. For that, you have to segregate the cost into variable, then fixed, and then you have to find out the contribution per unit also. Okay, so it seems to be a straightforward question. There is nothing complicated. So we will do that. 12.6. Okay, so first working should be to compute the number of patient days that has been utilized in the year. Number of patient days consumed. So they say that 35 beds into 150 days plus 25 beds into 80 days. So that will be 35 into 150, 5,250 plus 25 into 80, 2,000. So that is 7,250 bed days. Add additional beds hired. What is the additional number of beds hired? You have hired 750 beds. So total beds, it is 7,250 plus 750, that is 8,000. Okay, 8,000 patient bed days. Now what do you have to do? We can straight away calculate the profitability because you are asked to find out what is the profitability. So statement of profitability. So first we have to consider the statement of cost, then the total. Okay, so I'm going to take cost incurred in this ECU. So I'm dividing total cost into variable cost and fixed cost. Variable cost. Doctor's fee. Doctor's fee, they say that doctors are paid at 2,50,000 per month and you have 12 months. So it is rupees 2,50,000 into 12. That is rupees 30. Number of doctors is not given, but you don't require number of doctors. They say that total revenue, the salary is 2,50,000 per month. Whether it is paid to one doctor or multiple doctors, that is not specified. Now, what next? Variable. When you talk about the other things, supervisor salary and all, it is going to be fixed. Rent is going to be fixed. Nurses fees, then ward boys, all these things are fixed. Okay. Now, why you took doctor's salary as variable? Because it is based on the number of patients attended and the time spent by them. So we are considering it to be variable. Now, another things, you can take food to patients, 8,80,000. $8,80,000. Next, other services to the patients, 3 lakh. Then next is laundry charges, 6 lakh. Laundry charges, 6 lakh. Then come to medicines, 7,50,000. $7,50,000 medicines. Then you have what else? Administrative allocated, all those things are fixed. Now you have the hiring of beds. bed hire charges. You have hired 750 beds and each beds at rupees 100. So this is 75,000. So total variable cost is 30 lakhs plus 8 lakh 80,000 plus 3 lakh plus 6 lakh plus 7.5 lakhs plus 0.75. It is 56 lakh 5,000. So you have total variable cost. Now I am computing the total fixed cost. Contribution and all we will compute later. Okay, so fixed cost will be the remaining cost. First we have to take the rent. Rent they say 75,000 per month. So 75,000 into 12. So that will be 9 lakh. Then you have supervisor salary. You have two supervisors and each are paid 25,000 per month. Like that you have 12 months. So 25,000 into 12, that is 3 lakh into 2. That is 6 lakh. Then salary to nurses. How many nurses? 4 nurses. Each nurse is getting 20,000. Like that you have 12 months. So 20,000 into 12 into 4, that is 9,60,000. 9,60,000. Then what next? Ward boys salary. Ward boy salary 4% and 5,000 and you are paid 12. It is 2,40,000. Okay. Now others, you have the repairs fixed 81,000. Repairs will be 81,000. Then you have, which is the other fixed expenses 10,80,000. $10,80,000. Then you have allocation of administrative charges. Admin charges allocated is 10 lakhs. So when you take the total, it is 9 lakhs plus 6 lakhs plus 9.6 lakhs plus 240, 81, 10 lakh 80, then 10 lakhs. It is 48,61,000. Okay, now total revenue. They say that how do you find out the total revenue? Total revenue is given to be rupees 2,000 per patient per day. Rupees 2,000 per patient day. How many patient days you had? We had already computed 8,000 patient days. Okay, so that is 2,000 into 8,000. That is 160 lakhs or 1 crore 60 lakh. From this, we have to reduce the variable cost. What is the total amount of variable cost? Variable cost was 56 lakh 5,000. So remaining what you have is the contribution for the year. So 160 minus 56 lakh 5,000. It will be 103 95,000. Now from this we have to less the fixed cost 48 lakh 61,000. So the balance will be profit. What is the profit? This minus 48 lakh 61,000. You have a profit of 55 lakh 34,000. See, we have already covered the chapter on marginal costing, and there we have learned in detail how these calculations have to be done: contribution calculation, then profit calculation, etc. Okay. Now you have to, when you come to the question, you are required to find out the profit per patient day. Okay. So profit per patient day. How do you find out the profit per patient day? Is equal to total profit divided by number of patient days. Total profit is 55 lakh 34,000. Patient date is 8,000. So that is 55 lakh 34,000 divided by 8,000. That is rupees 691.75 per patient day. See, this is profit, not contribution. Now you are required to compute the break-even point. What is break-even point? That is equal to fixed cost divided by contribution per patient day. Okay. So fixed cost is given to be 48 lakh 61,000. And what is contribution per patient day? Total contribution is 103.95. 103 lakhs 95,000 divided by, what is the total number of patient days? It is 8,000. So that is equal to 48 lakh 61,000 divided by 103.95,000 divided by 8,000. And this is 1,299.375. And that will be 48 lakh 61,000 divided by 1,299.375. That is equal to, not in rupees, 3,741.03 patient days. And we have already seen that when you round it off, the break-even point, you have to round it off to the next highest. So that is equivalent to 3,742 patient days. Okay, that is the break-even point. Now that's all about this question. Now we have to move to the next one, that is the costing of IT and ITES. Okay, costing of IT and ITES. Here, when you come to the IT and ITES, the cost object will be any project. Okay, it will be project. Now, what is a project? Project is an assignment which is taken up. Okay, and which is taken up by the company. And who executes this project? The main cost in case of execution of a project will be the labor cost or employee cost. The company will allot different a group of team members or a group of professionals to execute the project, and there will be supervisors. So supervisors will be overseeing this particular team. Okay, so when it comes to the costing, the project will have employees or professionals who are exclusively working for that project. Their salary cost will be exclusively charged to that project, whereas there will be managers or supervisors who will be monitoring multiple projects at a time. So their salary cost will be allocated to each of these projects depending upon the time spent by them. Okay, so the cost objectives, project and major expense here will be salary expense. Now, when it comes to salary expense, there will be direct employees exclusively working for the project, and you will have managers or supervisors who will be supervising multiple projects simultaneously. Multiple projects simultaneously. Now, when it comes to direct employees, salary will be directly charged to the project cost. Whereas here, managers, supervisors, what happens here is salary will be apportioned. Apportioned to the project which we are allocating. Now, this will be the major cost. Now, there will be admin cost, which will get allocated to the project. And even when you talk about the admin charges, okay, the admin cost will be mainly depend on the number of employees. So the basis for allocating admin charges, you can take any basis which is suitable, but one of the prominent basis which generally adopt is the percentage of salary, because salary is the major cost and the salary is what is directly charged. So based on that, you can charge the or allocate the administrative cost also. Now we will look at a question, and when we do this question, it will be even more clear to you. So you can take question number 12.7. Please pause the video and then read the question, then come back. Okay. Right. So what all details are given here? The following are the data pertaining to Infotech Private Limited for the year 2019-20. Okay. The following details are given. Salary to software engineers, 5 persons, 15 lakh. Salary to project leaders, 2 persons, 9 lakh. Salary to project manager, 6 lakh. Repairs and maintenance, 3 lakh. Administration overheads, 12 lakhs. So very straightforward question. You have certain details of software engineers, project dealers, project managers, then repairs and maintenance, as well as the administrative overheads. Now, the company executes project XYZ. So the company is right now executing a particular project known as XYZ, the details of which are same as under. Project duration is 6 months. 1 project leader and 3 software engineers were involved in the entire duration of the project. See, so exclusively working professionals will be 1 project leader and 3 software engineers who are exclusively working for this project over this 6 months duration. Whereas project manager spends 2 months efforts during the execution of the project. So allocation is required in case of salary of project manager. Now travel expenses incurred for the project is 1,87,500. 2 laptops were purchased at a cost of 50,000 each for use in the project, and the life of the same is estimated to be 2 years. Prepare the project cost sheet. Very simple question, nothing complicated here. So you have to compute the project cost sheet. Question is question number 12.7. Okay, so first will be the salary cost. So let's see the straight away we can start with the project cost sheet. Project cost sheet. Now, first is salary cost. First is salary of software engineers. How many software engineers? 3%. Each are paid 25,000 per month for 6 months. So that will be 4,50,000. Now, salary of project leader. Salary of project leader. How many project leader is required? You need one project leader. And what is the salary that is paid? The salary to be paid. See, in case of software engineers, I forgot to show you how you get 25,000 per month. Okay, so the salary of super software engineers, we can give a working for that. Let me leave some space. Computation of salary per month. Now, total salary of the software engineers, 5% is going to be 15 lakhs. So I think since we have different types of employees, we will give it in a tabular format. So type of employee, okay, cost per annum, which cost? Salary cost. Then cost per person, then monthly salary cost. Monthly cost per person. Now software engineer, 5%. So total cost is going to be 15 lakhs. So 15 lakh divided by 5 will be 3 lakh. So per month, it will be rupees 25,000. Now, project leaders. Project leaders total cost is 9 lakh. And you need how many persons? 2 persons you have. So each persons will be paid 4,50,000. Per month will be 4,50,000 divided by 12. That is 37,500. 37,500. Now you have project manager. Project manager, 1 person is paid 66 lakhs. Divided by 1 will be 6 lakh. Divided by 12 will be 50,000. Okay. So here salary of software engineer, it is 25,000. So into 6 months will be 3 into 25,000 into 6 months, 4,50,000. Whereas when you come to project leaders, 2 project leaders are required, or 2 project leaders have been, is it 2 project leaders or 1 project leader? Let me see. 1 project leader. So it is 1, and each project leader is paid 37,500 per month, like that 6 months. Okay. So 37,500 into 6 will be 2,25,000. Next is project manager. Project manager has deputed his time only for 2 months. And each month he is paid 50,000 per month into 2 months. So that is just 1 lakh. So total salary for 50,000 plus 225,000 plus 1 lakh. 7 lakh 75,000 is the total salary for the project. Now what do you have to do? You have to allocate the overheads. When you talk about the overheads, you have two types of overheads. One is repairs and maintenance, 3 lakh, and administrative overheads, 12 lakhs. Now, how do you allocate this total overheads? This can be allocated based on the salary. Now, so let me write basis of allocation of overheads. The base of allocation is equal to salary paid. So percentage of overheads allocated to the projects. What do? You see total overheads that is divided by total salary cost. Let's see what is the proportion. On this proportion, you have to apply this proportion on the salary cost that is incurred for a particular project. So that will give you the overhead that needs to be allocated to that particular project. Now total overhead here is repairs and maintenance is 3 lakh. And the overheads that is allocated is how much? 12 lakhs. And total salary cost. Can you take this total salary cost? 7,75,000? No. That is the salary cost for this entire project alone. Whereas to compute this overhead rate, what you need is the total salary cost of the entity. Okay, which means it should be total of this 15 lakhs plus 9 lakh, 24 lakhs plus 6 lakh, that is 30 lakhs. So 30 lakhs. So that means 15 lakhs divided by 30 lakhs into 100, that is 50%. So what does it mean? Overheads are allocated at 50% of total salary cost. So salary cost 7,75,000. So you have to add overheads. Overheads allocated at 50%. So that is how much? It will be 7,75,000 into 50%. 7,75,000 into 50. That is 3,87,500. Okay. So in addition to this, you have one more cost. What is that? You have to take the travel expenses. So add travel expenses. It is a direct cost for the project. What is travel expenses? It is 187,500. Then you have purchased 2 laptops for which you have to charge the depreciation. So add depreciation for laptop. What is the cost of laptop? 2 laptops were purchased at a cost of 50,000 each. So 50,000, 2 laptops. So into 2. Okay. And its useful life is 2 years. Now here you are using it only 6 months for the project. So 6 months into 6 months divided by 12 months. So that will be 1 lakh divided by 2 divided by 12 into 6, that is 25,000. So total project cost, salary is 7,75,000 plus 3,87,000 overhead charges, then 187,500 is the travel expense, then 25,000 is the depreciation. So total will be 13,75,000. That is the total project cost. Okay, so that's all about the question on IT and ITS sector. Now we have to take the last one, that is costing of toll roads. Here also you don't have anything to explain as such. So straight away we can go to the question and we will do the question. Okay, so please take question number 12.8. Pause the video, read the question, then come back. Okay, so let's see what is given here. BHT Toll Plaza Limited built 60-kilometer long highway and now operates a toll plaza to collect tolls from passing vehicles using the highway. So what is the length of this road? It is 60-kilometer. Okay, and they have started collecting tolls. Now the company has estimated that 12 crore vehicles, just one type of vehicle, but 12 crore vehicles will be using this highway during the 10-year toll collection tenure. So that means 12 crore over 10 years, which means the vehicles per annum will be 12 crore divided by 10, that is 1.2 crore vehicles per annum, right? Okay. Now toll operating and maintenance cost for the month of April 2020 are follows. So it is given for a particular month. Now collection personnel, you need 4 persons, 3 shift, 550 per day per person. Supervisor, 2 shift, 1 person, 750 per day. Security, 3 shift, 6 persons, 450 per day. Toll booth manager, 2 shift, 1 person, 900 per day. That is the salary structure. Electricity, 8 lakh. Telephone, 1,40,000. Maintenance cost, just 30 lakhs. Monthly depreciation amortization expenses will be 1.50 crores. Further, the company needs 25% profit over the total cost to cover the interest and other costs. So all details are given. What is the requirement to compute? Compute cost per kilometer per month. Then toll rate per vehicle. So cost per kilometer per month. So first we have to find out total cost per month divided by total kilometer. That will give you the total cost per kilometer per month. Okay. So let's do the calculation. Right. So first we have to compute the cost for the month of April. So one by one, you can take the first cost, salary to staff. Okay. First is you have the collection personnel. Collection personnel, you need it for monthly cost, right? So there are 3 shift and they say that there should be 4 persons per shift. So 4 persons per shift. And how many days have to be paid? Number of days will be 30, right? It will be 30 days. And what is the rate you are paying? It is rupees 550 per day. So this will be 3 into 4 into 30 into 550, 1,98,000. 1,98,000. Now, salary to the supervisor. They say that how many shift? 2 shift, 1 person, 750 per day. two shift, one person, 30 days. What is the rate? Rate is 750 per day. Rupees 750 per day. So 2 into 1 into 30 into 750. That is 45,000. Next is security personnel. Security personnel, pre-shift 6%. $450. Pre-shift 6, 30, 450. So it will be 2,43,000. Next is toll booth manager. Toll booth manager, you have two shift, one person, then 30 days, and he will be paid 900 per day. So that is 2 into 30 into 900, 54,000. So total salary it is 198,000 plus 45,000 plus 243,000 plus 54,000. That is 5,40,000. Add. You have to add other cost. Add electricity. What is electricity here? 8 lakh. Telephone 1,40,000. Maintenance cost. Maintenance cost is to be taken as 30 lakh. So all costs have been taken. So total operating cost. Total operating cost. It is 5,40,000 plus 8 lakhs plus 1,40,000 plus 30 lakhs. It is 44,80,000. Now with this, you have to add, there is monthly depreciation amortization will be 1.5 crores. For tolls, the amortization or depreciation will be the biggest cost, because whatever cost they have incurred for constructing the road or whatever civil construction they have made, that has to be amortized over the period of the toll. So that will be the huge or the highest cost. Okay, so add amortization or depreciation cost. It is 1 crore 50 lakh. Okay, so total cost will be 44,80,000 plus 150, that is 194,80. Okay, now next, this is the total cost. Now coming to the next, calculate cost per kilometer per month. Cost per kilometer per month, that is equal to total cost per month divided by total kilometer of toll road, that is equal to rupees 194,80,000 divided by 60 kilometer, right? So it will be rupees 3,24,667 per kilometer. The cost will be 3,24,667 per kilometer. So this is the operating cost, or this is the total cost for each kilometer they have constructed. Okay. Now next is you have to find out toll rate. Toll rate per vehicle. So for that you have to find out what is the total number of vehicles per month. Number of vehicles per month is equal to total is 12 crore. Divided by 10 years. So this is the number of vehicles per year into 1 by 12. That is the number of vehicles per month. So that is equal to 10 lakh vehicles. Okay. So total toll revenue to be collected. What is total toll revenue to be collected? They say that the company needs 25% profit over total cost. So monthly cost plus 25% profit. What is monthly cost? Monthly cost is 194,80,000 plus 25% of cost. That is equal to 194,80,000 into 1.25. That is equal to rupees 243,50,000. Okay, that is the total toll revenue to be collected in a month. Now, from how many vehicles it has to be collected? From 10 lakhs vehicles. Therefore, toll rate per vehicle, it is equal to 243,50,000 divided by 10 lakhs. That is equal to rupees 24.35 per vehicle. 24.35 per vehicle. So this is the total toll rate that have to be collected. Okay, so this is also very simple, but one thing which we have to keep in mind in case of toll is that the major expense or cost that needs to be recovered will be the amortization cost or depreciation cost for the toll road constructed. And whatever cost that has been incurred for constructing the road, that have to be recovered by the toll company over the period in which they are permitted to collect the toll. So if the period for which they are permitted to collect the toll is 10 years, then the entire cost have to be recovered over that 10 years. Okay, so that will be the highest cost. Plus, they will have operational cost of conducting the toll. Like there will be toll booth construction, its amortization and all, depreciation and all. Then there will be personnel who are required to collect the toll booth, which will include the toll collection boys, then supervisors, managers, all those hierarchical people. Then whatever be the administrative charges that have to be charged, then direct expenses like electricity, then there should be security persons, all those things have to be charged as cost for the collection toll, and the toll charge will be fixed after adding a particular margin, fixed margin on the total cost incurred. That is how you compute the total toll revenue to be collected. That divided by the number of vehicles that is expected to cover or cross during a particular period will give you the total toll rate per vehicle. Okay, so that's all with this. Now, if you see the textbook, you have few more areas where you have few more questions. But I am not discussing that in this class because all those things, the concepts we have already seen, and we have seen a handful number of problems also. So the remaining questions you can go through one by one. Okay, solve these questions from the textbook as well as the exercises, and that will be helpful. Okay, so with this, we are stopping this chapter. So thank you.